Good morning from Los Angeles. It's Friday. It's sell-off Friday. Thank God it's Friday. Um, Pretty bloody for my account. I don't know about you guys. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern, where we keep it straight, where we keep it fully transparent, losses, gains, all of the above. Unemployment numbers were not good today. President Trump may be getting his interest rate cut now. If the economy is slowing down, the market's sensing it, we're getting a little bit of a sell-off. I mean, look, we were at all-time highs. We were grinding higher. In fact, on yesterday's trading with Sergio, I talked about VIX. I talked about, things may start looking shaky here. And sure enough, I did not do much about it except today. I started cleaning it up. When a sell-off starts, nobody knows where it's going to stop. So, as I said a million times to my members as well, I trade account equity. When account equity reaches a certain point, you got to go flat. And I'm trying to do that today, mostly. But the other interesting thing, which I shared with my member group, is I had a coaching session this morning between 8 and 9 a.m. And I've been using the same trading coach. He's a psychiatrist for the last, I don't know, 28 years now. He knows the way I trade. He knows me well. He's a trader himself, so we straightened some things out. So basically what trading coaches do is you need an objective eye, somebody that knows the business and somebody that knows your style of trading, and then shows you what you're doing wrong, because when you're in the heat of the battle, it's not easy to figure out what's going on. I mean, look, I'm still, I think, up about 52% for the year, but I was up 70%. So I've had an 18% drawdown, and that's way too much for my liking. I should have, would have, could have, of course, kept it at 10% max. But yeah, that's trading for you guys. It's not a, it's not a joke. I mean, I treat it very seriously. I treat it as a business, not because my money is involved. I treat it because, well, I broke my own rule of keeping it at 10% drawdown, got it to 17, 18% now. And it could get worse if I don't close everything out. The only way to stop it is to close everything out, go flat, turn the computer off, come back in a couple of days or a week or whatever. And I'm in the process of doing that. I cleaned up a lot of positions. I talked about my own, how, every trader gets hot, gets cold. We all need confidence to do this properly. And when your account gets a drawdown, it kind of chips away from your confidence. But that's when experience comes in, having it done for over, I don't know, 20, 30 years plus now. Had many, many, many of these drawdowns. The only thing that this is the second time this year that I was absolutely positioned correctly with some index puts, and on the sell-off yesterday, I sold them, and look where we are, right? That would have mitigated absolutely everything. In fact, it would have helped the account to be green on a down day. This is the second time this is happening to me this year, which is very unusual, but it does happen. And because when the market keeps grinding higher and higher and higher and higher, your puts are melting on the index side, and your longs are okay, but on the first down day, your longs are getting decimated, and your puts don't go up that much. That's the dilemma. That's the problem we have as traders. How to keep it a balance, and it's tough. It's tough. But again, being up for the year, I guess I'll take my, pat in the back on that. Actually, the session was very constructive. I will have, I share my notes with my members group. Hopefully they enjoyed it. And even at my level, we mess up. I mean, I'm not saying mess up, but, mess up as far as stopping the bleeding when it needs to stop. And yeah, learn. Just keep learning, keep moving forward. My goal is to obviously be probably 5x or 6x of the benchmark, which is the S&P 500. I mean, I'm there, but it's tough. On days like this, it's tough to just kind of come to Jesus moment you have, and the markets. This proves to me and to everybody that trades or invests, or investing is a little different. This proves to me that market doesn't care who you are, what you know, how much experience you have, how much money you have. It just doesn't make a difference. And you need to be really, really careful with risk and managing risk. And on this drawdown, I did not manage risk properly, and I'm the first one to admit it. But again, 2020, looking back is easy. We need to look forward. We need to move forward. So I'll go to the positions, but yeah, good morning. Good morning, everyone. And so what I can tell you guys is that one thing that I cannot emphasize enough is obviously trading equity. Individual positions are going to do what they're going to do. I've talked about this a million times. But the other thing you guys need to do is, my mentors used to say it's never too late to sell. And things that you think they're somewhere reasonable don't look reasonable 3 days later. So that's why, that's why you do what you have to do. You have to protect yourself. Making money is easy. Keeping it is hard. And the only way to do that is manage risk. And if anybody says, yeah, in 3 months it's going to be okay, we don't know. If anybody says they know what's going to happen the next minute, they don't know. So, we're working on probabilities. You're taking the highest probability trades or shots. Day traders do their thing and swing traders do their thing. But, you do these coaching sessions. And then the other thing that I do religiously is more than a mental, physical diary. You have to create a diary. You have to write things down. It's easy to do. We can record it, write it down, do whatever, daily, pretty much. And then look back every day and say, okay, well, we did this one, this worked out. Just because the market comes back and saves people over and over and over again, I'm not buying any of that. And my goal is to outperform. I get paid to outperform. When I say I get paid, obviously I don't work for anyone. I pay myself to outperform. And when the outperformance is not to my satisfaction, I don't need to spend hours and hours. I can have leisure time. I can do other things instead of trade. So you need to have a reality check as a trader. And but it's an addictive thing. I understand it's tough to close shop and go away, but that what must happen to everyone. It's better than blowing accounts, right? Or having massive drawdowns and then have this massive roller coaster ride. So, with that said, that's all I can do. Manage risk to the best of my ability. And let's go to the positions. Actually, I have like an hour today, so let's put the link up if anybody wants to come on and chit chat a little bit and talk about their own situation. Here is the link. So if you guys want to grab the link and come on, you're more than welcome to do so. What else? Yeah, let's go to the positions. Let's see the bloodbath. I mean, it's a bloodbath in my account today. It was just one position that should not have been there anyway. But on days like this, when your longs are down, getting hammered, 20% or so, and when your shorts are going up, you're on the wrong side of the fence. And hope you guys can see that. So I've trimmed quite a bit. This is the big one that's just meltdown. Shouldn't have been there. And then talked about it with the coach, and he was like, "What is it that you're doing?" But then, he goes, "Ultimately, it's your money. You got to do what you got to do." But he's right. I'm wrong. So we cleaned up a lot. But I'll clean up some more on the bounce. when and if there is a bounce. So AEVA Technologies, I had a synthetic, long synthetic, short to puts, long to calls. If the stock is down 20%, you know the result down 17%, right? Stock was a $37, $38 number. I did it at 20 on support. What support? Melted right through. So this is a position that will get cleaned up on the bounce without a question. And on the bounce, you'll gain some of the equity back that you're losing today, and then you reassess. So I was short 2,000 shares of Joby Aviation. At least that's the one you're on a day like today when your short's going up. You're definitely cold. And I talked about this being cold, being hot as a trader. You have periods. You're not going to be hot all year. You're not going to be cold all year. It is how much damage you're getting or you're experiencing when you're cold and how you manage that part. And it's tough to know because you're in the heat of the battle. Am I cold? Am I hot? Well, it was pretty obvious to me. I was talking to my members actually 10 days ago, a week ago. I go two things I said to the members group about 10 days ago. I said, I want to short everything and come back in 2 weeks. That would have been the perfect thing to do. Number two, when you're cold, you revenge trade a little bit. You feel like you need to press. None of that is necessary. So, and you paid the price, and I'm paying the price today. So Joby Aviation, we were short 2,000 shares, but also short the puts, which I took in some premium. Covered that up. Actually, that turned out to be probably a break-even trade. It really was never too profitable, to be perfectly honest, but we'll see. We'll revisit that at some point. I'm long 8,000 shares. It's a long strangle. I'm long 8,000 shares of Lithium America. That position did not change. Actually, that's not melting down as much as I thought it would melt down. So we'll see what happens there. New position, I'm buying some October 250 Lululemon calls. I'm up to 35. I have 5 more to buy at 375. Stock is definitely in a death spiral, it looks like. But then I look at this as another Nike kind of a situation. Earnings are out, I think, in September sometime. I'm buying October calls, so I'm comfortable with those at the moment, but could change my mind. The only position actually that's working today is my gold trade. Gold is up big because dollar is down, so unemployment numbers were not good. And interest rates are going down. Interest rates going down, getting the dollar weaker. So that's the only winning position today, actually. Which we will keep, obviously. And then I was long a synthetic, meaning long short puts, long calls. Obviously, on days like today, when you do that and you're on the wrong side, you're going to get your face ripped. Although I did cover that with the coach. He goes let's just clean up. And, clean up is made from God. You got to clean your house. And as much as it hurts taking losses, you got to learn how to take losses. And so we covered we actually reduced quite a bit of risk. The risk meaning being short puts. Being short puts on a drawdown is not healthy for anything, for your bank account, for your account, for your mental state, confidence, all that stuff. Being short puts is great when things are going up because the premium you're collecting, you're melting. But then at the same time, though, when VIX was down to 15, and selling puts does not make sense with that kind of low volatility. So that was another thing that we came away with. So we need to adjust the game a little bit better. And so, yeah, we shut down a lot of risk. So the only the risk that I see here is the first position, AEVA Technologies. Earnings are better, and then a couple of analysts have like $30 targets, but it doesn't mean shit on days like today. Hopefully we'll get a bounce and we'll clean that up as well. And Lululemon, I will keep adding. My stock is down to 2020 levels, and the company is twice as large as what it is in 2020. But again, trading and fundamentals should not get mixed up. Short-term trading especially. So yeah, that's where the positions are down to basically 1, 2, 3, 4. Yeah, 4 positions, as opposed to having 15 couple 3 weeks ago. So yeah, that's where we are. I mean, this is Lululemon. Let's look at the charts, actually, bigger charts, and then I'll answer some questions. Okay, so that's Lululemon daily chart. Death do us apart. It even didn't pay attention to the long-term moving average. It's going through it. It's going through the stock is going through the 200 EMA on its long-term chart going back. Actually, Lululemon now is selling at the same price as it was selling in late 2019. So again, stocks are to be bought and sold. I said this a million times. You know, if you say, yeah, Lululemon, well, from 500 down to under 200, how do you get out of those situations, right? So, but we're looking for a bounce, oversold bounce. And when the market sells off, the selling intensifies, and yeah, it doesn't work. And this is AEVA. This is the killer, actually. This is like a negative $8,000 day just on this position. Look at that. I mean, I stepped up right about 18.5, 19, where support was. What support? We're going to the 200 EMA probably. But, you know, again, breaking the rules. We affirm the rules. Rules are not to be broken, and I broke my own rule, and you pay for it, which was do not buy anything under its moving averages. I mean, obviously, looking back is what it is. It makes trading, right? And I thought it was the right thing to do at that moment, and 100% incorrect. Okay, so now you wait for a bounce. Hopefully, you'll get a bounce back to the 50 EMA. Hopefully, or maybe wherever, somewhere around 18 to 20 range, and you bail. And short puts, long calls, so that will add to the equity if it does bounce. If it doesn't bounce, it doesn't bounce, and then you take your loss and you move on, and you revisit. Those are the two positions. Gold, obviously, NUGT. On that one, I am short put credit spreads, and then with some of the money on the put credit spread, I went and bought a call debit spread, and I covered the short side of the call debit spread with 50% gain. It's fine at the moment. Not it's only 10% of the account, but break on that is going to be 70. If it doesn't hold 70, we got to get going out. But we'll see. Gold should rally now, because if the rates are going to go lower, dollar is going to go lower, and this is the dollar index. You guys, if you're going to trade gold, watch the dollar index. This is the dollar index. Big. I mean, had actually big rally last 4 to 5 days. Well, now we're selling off. It should stop somewhere here and then roll over and continue its downward path. Everything oversold gets a bounce, folks. Nothing goes down forever. And so let's look at the usual suspects and indexes. Earnings were good, especially on Meta and Microsoft. I can even fucking type correctly today. Okay, so this is SPY revisiting the low. This is let's see, this is a 2-minute chart. We died, we bounced, we attempt to bounce, rolling over, under VWAP. We'll see. But let's look at the dailies, 1 year, 1 day. First time, actually, with the gap down on top of everything else. We're going through the 20 EMA, which is the yellow line. I'm pretty sure we're going to revisit the old high, which is going to act like support, and as well as the 50 EMA. So until then, I will not be touching much. And is it going to be another trade situation? Well, time will tell. The only way we can tell is if the moving averages are violated. The bad thing here is I've been talking about this for 2 weeks now. There is a bearish divergence developing, and today is getting confirmed on the MACD, on the daily chart. Got to be careful, folks. And then, 580s in play. That's the 200 EMA. So that's the last leg of support. But, if anybody says it's going there, they don't know. If anybody says it's going to be all-time highs in a week, they don't know. You just follow the price. The price is your Bible. So that's that. The odd thing is 2 days in a row, we tested the upper channel level. That was the channel that we broke down from last time. That's why I left it there. Usually we will have a tendency to bounce back to that and roll over, and that's what's happening at the moment. That's the picture that I'm seeing. Triple Q, same thing. Bearish divergence was developing. Now it's confirmed. Now we got to be super, super careful and clean things up as opposed to taking long shots. You just got to have patience now. And that's where we are. Mag 7, Apple had okay earnings, but then nobody cares today. Wrong day to have earnings and wrong day to have bad earnings. After opening higher, massive leg down on Apple. Amazon, same thing. Massive gap down. The only two were Meta and Microsoft. I mean, talk about ridiculousness. They added 400 billion in market cap, but again, not for me. And gapped up today. The gaps are being closed, but we'll see. Are they bio and pullbacks? Yeah, but then let's get a pullback, and we're getting one. What else? Tesla, yeah, there is the wedge that everybody has drawn, including myself. It kind of retested it, broke under it, and testing the 200 EMA. It's holding so far, but we'll see where it goes depending on the market. And what else was I going to say? VIX, obviously, we need to look at that. Yeah, VIX is having a big up day. And you guys know what that means, right? When VIX is going up, market's going to go down. Actually, volatility picking up, at some point is a good thing. If you're a seller, what do we buy? This one is going lower. Yeah, on its ass. Let's take a look. I don't think we bought that, but we bought something else. I don't know what we bought. Lulu? Is that what we bought? Not sure what we bought. I'll take a look in a minute. No, we didn't buy that. What do we buy? Honestly, not even sure. Oh yeah, we bought Lulu's. Okay, that's fine. We got 5 more at 350, so it's fine. Okay. And let's see. Let's look at some of the nosebleed stuff. Are they even going down? Palantir. I mean, they did tank in the morning. Look how strong these stocks are, right? The strong ones stay strong, and those are the ones that come back right away. And same thing with Hood. Hood opened down sharply, and I think it's green today. Those are the stocks to look at that. I mean, that thing, wow, did it really bounce that much? Yeah, look at that open. That's the 1 minute chart. I mean, 2-minute chart one day. Look at that gap down open, scooped it up 93. Stock goes from 93 to 105. This is yeah. So strong ones stay strong. That's what it looks like to me. And those are the first ones to go red to green. And you got to follow that. Strong ones stay strong, period. Same thing with NVIDIA. I'm sure it gapped down pretty hard, and then it's kind of rolling over, but still, strong stocks stay strong. Trash gets worse. And that's the name of the game. That's NVIDIA. That's gold. Gold is, in this range. Let's see if it breaks out. It will definitely help any GT. So we'll keep that position alive for now. What else are we looking at? If you have any questions, please put them up. We are some of the other Mag 7 stuff. Netflix, I think that was up today. It's down a little bit. Yeah, it's been actually going down since the earnings, kind of ratcheting down. And on the crazy stock side, Joby Aviation, that's the one I was short and covered it. We'll see what happens. I don't mind shorting that stock again, but I just got to reduce risk. I can't wake up to disasters. Let's see, the 1 year, 1 day. Yeah, that is the 1 year, 1 day. So yeah, I mean, I may have made some money on that. I don't know. The shorts arrows are higher than the long, so I don't know. But yeah, it rallied one more time to 18 intraday. I covered it actually right here today, thank God. Before it rallied another $1 and change, but we'll see. And now it's revisiting. I mean, when that breaks, that's going to be epic. And at the moment, it doesn't look like it, but I don't think that stock is worth paper printed on. But then opinions are just opinions. MACD's on a sell. Doesn't mean anything. Earnings are going to come out. They don't even have revenue. Forget earnings. So it's just building this little sideways action to be breaking out, going to 25, or breaking down, going to 10. We'll find out. But I'm not going to take any positions on anything going the rest of the year until I am 100% sure. And it's on its way. No more anticipation. Anticipating things is not going to work out. And yeah, that's where we are. Okay, let's go to the front. Let's answer some questions. Okay, nobody wants to come on. Happy Friday, Macro. SoFi. Yeah, okay. I know. I mean, SoFi did a rug pull actually after the earnings closed, but let's take a look. I was short SoFi. I came out with my ass together on that too. It's tough. It's tough. There's SoFi. Gap up, gap down, gap up, gap down. I have not seen this before. Well, very rarely for a company like SoFi. This happens on pump and dumpers. This is nuts. Look at this. I mean, you literally, for 4 days in a row, you would be wrong. If you bought it on the gap up, you're wrong. If you sold it on the gap down, you're wrong. If you bought it on the gap up, you're wrong. If you sold it on the gap down today, you'll probably be wrong. So MACD has been on a sell, so that's the only negative thing. But yeah, not my cup of tea, man. It's tough. I don't want to. I mean, you know. So yeah. Okay, folks. So I'll be back on Monday with Trading with Sergio. I'm going to continue for another month, doing some daily updates and things like that. I'll keep you guys posted. Please subscribe and turn on notifications so you get notified if I'm doing lives or not. And that's about it. So today's going to be short and sweet. We'll see. We'll see where the sell-off goes. Does it get intensified? I mean, the Trump tariff extensions did not help. I guess he's standing his ground with a lot of countries saying that, hey, no negotiations. This is the rate you get. Well, the only thing I wanted to actually take a look is TLT. The rate's going lower with you guys. This will actually, the odds of a September cut has increased to 85% from 50-some percent. Yes, because unemployment. If unemployment is weak, Fed's mandate is not going to be met. That means if unemployment is weak, inflation is going to be in target. Unemployment getting weaker, they need to cut rates. Cutting rates, though, does not mean market will automatically go up, because if it senses that the economy is really slowing down, although 1 month's worth of economic data doesn't make sense, but if the economy is slowing down, unemployment's going up, Fed needs to be aggressively cutting rates just to preempt a potential slowdown or a recession. So TLT has bottomed about 85. It's 87. I had a TLT trade. I may put that back on if the rates are going down. TLT, I think, is the place for you guys to be. So TLT is the inverse indicator, by the way. If TLT is going up, that means interest rates are going down. If we're going to get in a cutting cycle because the economy is slowing down, market's going to sell off, TLT is going to go up. So we'll look at that accordingly. We'll look at that accordingly. Yeah. Yeah, S&P definitely should retest the 50 EMA. And where is my trash going to be at that time? I don't know, but we'll have to wait and see. Yeah, we retested the low, intraday low. We're kind of bouncing a little bit. And it's a Friday, folks. On Friday, you don't get too many bounces. We'll see. But I don't know. We'll have to wait and see. Yeah, that's about it. So hope you guys have a great weekend. I'm in LA. Probably go to the beach this weekend, gather my shit together, but my coaching session helped quite a bit. I was disgusted with myself. I'm very hard on myself, and my members know that. And twice I was completely positioned with long puts on indexes. What happens is that time is running out. You have a feeling that we're going out to August 15th, which I had time, and I had August 6:30 puts, August 15th expiration. My average was like 4 and change. I think I saw them at 14 today. I had 35 of them. That's $35,000. It mitigates every single long position you have. And I made some money, got out, but then, yeah, it's the second time it's happening to me, and it's actually aggravating me more than anything else. But let's look at the positives. Year is still strong. Let's keep it that way. And we'll keep fighting. That's all we can do. All right. So I'm going to say goodbye. You guys have a great weekend. May all your longs go up and your shorts go down. We'll end it with that. I'll be back on Monday with Trading with Sergio Monday edition. And members, I'll be in the chat in a few minutes. We'll talk about it. And if you guys have questions, post it there. Sayonara, as they say.